What's up, guys? Welcome back. So today I'm going to show you guys a little bit something different. Some of you might know it already from past videos that you may have seen me use, courses, whatever the case might be. So this tool is called the Trend-based Fib extension. So it's kind of like a Fibonacci, but the way I use it, I only use it to set target points. So I don't use the Fibonacci level of like the Fibonacci levels within the trend-based extension. I just use the top bits, right? So what this tool is used for is multiple things, man. They map out pivot points within a chart, right? They map out major areas of support and resistance as well. Like, so it just depends on how you decide to use it. So to get there, you go here, you go trend-based Fib extension, right? So how you use the tool is the key. Right, so let's say we're on an upward trajectory here and I'm looking to see now what's actually happening here. Look, guys, like from just price action standpoint, I would view this as a liquidity pool. Yeah, like liquidity, a break of structure, and trend, right, upward. So I'm looking for an upward trajectory simply based on what the price action is showing me here. One thing to note here is, guys, I'm gonna run through a liquidity video. I'm actually very excited to finally share this concept with you guys, and that's a cool thing to do. But for this video, let's focus on our trend-based extension. So we see the market's in an upward trajectory. I see a break, a little, as I said, like a smart money concept happening here, right? That's my confidence to kind of try and see what I can get out of the market, right? So if I wanted to catch a buy somewhere here, hypothetically speaking, yes, it is a lower low. However, if I had my RSI out, I would see that there was divergences. And I'm not going to show you guys in that video because I want to focus on this. So let's say this, right? Yeah, the market's showing us now, okay, cool, we're retracing again. The first thing you should always do is pull out your Fibonacci, right? You pull out your Fib from the bottom to the top. And you check, do we have any Fib levels that were respected here? Here we see a 38.2 that I would consider 38.2, maybe a 50, and that's a big maybe, right? Cool. Now remember, with the Fib levels, we also use these as targets. That's okay, guys, because it's the same thing, right? However, if you're a swing trader, what you'd like to do is you'd like longer term trades. You want to be able to hold trades for weeks on end, for months on end, you know, like that kind of thing. And this is where the trend-based extension comes in, right? So you go from your swing low all the way up to your swing high and down to your major retrace point, which is there, right? Then what you do is you mark off those areas. So you'll see here I have the 100 level I have marked off. I have the I have the 161.8. Sorry, guys, little, and then we have 261.80, right? So for just to keep the chart clean, I'm going to remove this off. So I have these targets in mind based on what I'm seeing here. So when the liquidity video shows itself, it will kind of make more sense as to why I saw the buy here, other than the fact that my RSI will also show that. So if you watch the RSI video, you're welcome to come back. This is on the 27th of February 2013. This is just to show you how far back I can go and repeat the same cycle, because I'm going to show you guys a few concepts of this as time goes on, right? So we have these targets in mind. Remember, I didn't use the Fibonacci, the Fibonacci on that. I don't need the Fibonacci, even though we know we have a 38.2 here. That's okay. I don't worry too much about that. I won't personally get in from this point though. I'll play the video through so that I can show you guys when I would actually look to get in. Right? Now, my look to get in would be here. Right? That's simply based on liquidity. I would look to get in from here once we got the confirmed higher low with a bullish engulfing candle. This would have been my entry here, right? Right, let's go. And remember, guys, you're swing trading, so your stops need to be kind of wide, right? I'll show you guys now. I'll backtrack to the video. Target one hit. Right, now remember, you fall down here. You're still very much in profits as the market's ranging. So the thing with target to hit, the thing with GBP JPY is it tends to range from time to time, like you can see here. It does it quite often. So you need to have all kinds of patience with this chart in order to hit your targets accordingly. Now, word of advice is to always put it just below. put your targets just below these areas. What you need to do is you need to build your confidence in terms of how far you're willing to hold this trade. So my take profit would be around about here, right? And we'll just see what happens. Remember guys, patience. We're running through months here of holding. Bang, target 3 hit, right? So what you guys can see here is that the market tends to kind of chase these areas. So it's like you'll see a lot of guys will tell you trade from key level to key level. What better key level to have than something that's going to give you. So say for example we got him from here, guys. Let's just run through the pip count quickly, right? Let's say we got him from here, like I said earlier, right? I'm bullish engulfing, so we get him from around about here. We'll take the buy here, right? That's already 1,320 pips. There you're looking at 2,669 pips, and there you're looking at 4,890 pips that cleanly hit, because you took it from the smart money concept, right? You literally took it here. You saw functioning support here, bang, 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 bang. There breaking structure, there the market went to go hit your first target. Bang, there it goes to hit your second, and eventually, once you get here, you more or less want to close when you get to the 1618, right? You normally close there. However, if you have patience, guys, you can run the stuff all the way through. I mean, that's a 4,000 pip move, simply based off liquidity, right? There are other confluences. Obviously, we got a confirmed gap in between our 8 and 14 MAs. We got a clean break of the 50 MA here. I mean, there's multiple confluences, guys. Like you can do this multiple ways. These are simply, remember guys, these are simply just to map out targets for you to target, to learn. And the best practices are, just to show you the risk to reward quickly. So long position from here, yeah. My stop loss would be below this area, because if it comes below this area, then I'm pretty much don't want to be in this trade. So I'll use this little order block as an example. Your first target already is a 3:4. Then you pull it out and you start going to 5 is for 83, and man, you just keep killing big targets, man. That is what 9 is 84. This reward. This as a swing trader is class, guys. It's sheer class. I mean, look at the move. We moved in an upward trajectory. We even range. We could ride out ranges based on the fact that we knew where our big pivot points were, and that's why we use them as targets. Now, one more thing I want to show you guys is that you want to do this, right? I just want to put it out in your settings tab. This is what it looks like. As you can see, it kind of mimics the Fibonacci. What I recommend is pausing the video, right? Trying to get all, make you match mine. Make sure it matches all together, right? Remember your background opacity, prices. Remember to change the percents, right? Top, right? Just pause the video, guys, anywhere in between here, so you can copy all the necessary levels. So that's just one concept of how you can actually use the trend-based extension. So let's say hypothetically we wanted to do it on a downtrend. Same principle, guys. What you do is you take it from the swing high to the swing low and up to the retrace point, right? So I would, up to the retrace, right? So now once again, remember, you just need to know which numbers you want to mark off, right? So here we have 1 year, we have 1 year, and we have 1 year. Before I forget, let's just move it a little bit closer in, couple of pips inward, like this. Alright, cool. Now that we have our levels, we can remove our trend-based extension, right? Now, once again, you kind of want to figure out your own confluences. In my case, it's kind of like the 200s above the 50. It crossed over recently. We have a double top up there. That's good enough. The double top's neckline got broken, and we're kind of ranging now. And we're ranging in a good space, and the 8 and the 14 is slightly crossed over, right? So solely based on that, I want to figure out my targets. Here's 1, 2, 3, and let's replay and see what happens. Target 1 hit. Target 2 hit. Right? Remember your stop loss is all the way up there, guys. So I wouldn't close from here even. I wouldn't have closed at all. Bang, target 3 hit, gone. Right? Now, just to paint a picture for you guys, remember we got in up here. No way we got in up here, right? After the double top. No, your entry should look something like this. So there's the bullish engulfing candle. This is your entry candle, right? You put it above that area of support here, just above this one. So you could, if you want to be a little bit more strict, you could have put it up there, I suppose, right? Depending on your risk appetite. And then you run it all the way down. Remember, guys, this is from a swing trading perspective. Mostly, you could use this on a lower time frame if you wanted to. I tend to like to use it for these purposes. As you can see, targets hit. Target's actually obliterated. I could have gone further if I had pulled the extension from the top here, like from the top here. But that's just to show you guys how quickly you could have hit that target, right? And that's for trend-based Fib extension. It's a pretty handy tool. It doesn't take much practice. Remember, you could use it for the purposes of Fibonacci if you were wanting to put in these levels, right? If you wanted to put these Fib levels in and use it along with your Fibonacci. But remember, with my Fibonacci, and this is why I use it separately. For my day trading and scalping, I use these three as my targets, right? Depending on where I get in, right? For swing trading, I prefer to use the trend-based extension because it's just longer term. As you can see, I have no, here should be Fib levels here. I don't use them for that. I solely use them for these three levels. In an ideal world, guys, what I'd recommend is target this one and this one first. Build your confidence on the 100% first. Slowly work your way up to the 1618, right? And then eventually, when you're comfortable targeting this one the whole time, because this is actually a golden one, right? Then you go for the big one. So like I say, guys, and as usual, I don't care for the pedantic terms that people use on these things. For me, they are target points. They map out major pivot points within a chart, and that's all you need to know, really. The rest is just history, how you need to use them. I hope you guys found this video useful. If you did, please click the like button. Don't forget to subscribe. We have a few new things coming. I'm sure you guys noticed that we have live trades also coming into play soon. The sessions should be really great. So let's get moving more than average, guys.